So we're thinking long energy, right?
Mm-hmm.
So let's go for a 5-minute chart real quick. And I'm going to put up here a big picture market profile chart. Okay.
Okay.
So here's the daily. So this is giving me the entire year where we are. So we're at 67%. So when I see this right off the bat, or actually, I want you to tell me right off the bat, what does that tell you?
That we are near a high volume node and value area.
And what does that mean as far as price movement? What should that mean?
That at this level we should expect some rejection or some response in.
Oh, no, I'm looking for volatility. What kind of volatility should we expect? Based upon the big picture here, the value picture. Not
a really big.
Not too much.
Yeah.
It's almost like that bullish percent where it's positive. We're positive, right?
Yes.
But we shouldn't expect to buy here at 67 and go straight to 75.
Right.
Okay. Because we're stuck at, this is fair value, right? 67.90 is fair value. It's spent the most time here, 67, and the most volume has been traded here.
Right.
The second most volume was at 65.
Yes.
The real opportunities were down here. And you could probably see that was May, June, July. Yeah, May, June, July. So let's go to now. What I want to do is I want to filter out size. So let's start with nothing. Okay, let's just see what happens when you have no filter. You obviously can't find any kind of real correlation. You can find momentum though. If you see this whole screen light up green like this, with a couple tests in here, that's positive. But then it goes straight to negative, back to positive. And if you're trading on this, you know, that's more for probably algorithms.
Yeah, I think so.
So how do we put that into perspective? Let's try to filter out for 5 contracts or greater. Okay, that looks pretty decent. So now we don't have too much, we don't have too little. So now we're going to look for evidence to support. Now we're not looking for, at this time there were sells coming in, right?
Yes.
But big picture, we're looking for a buy. So we like the fact that these sales are coming in. The sales are coming in. We see that we're not expecting a big, huge down. We can't expect these sellers to push it all the way down very easily because it's pretty much stuck in value. Okay. So the selling that occurred off the 68s should be, pretty much done. So now how we're looking at this is we're looking for a trap. So I want to take a picture of this real quick. And we have here fair value, basically. So fair value means fair price. Not much volatility equals less volatility. It's a little different. It's a little different because there's news right now about the hurricane. But that hurricane is not going to affect the Gulf region. It's only going to affect the East Coast, right? But initially, when it started out, it could obviously turn. But now it's confirmed. So the spike that happened in oil, that's why it's coming off so quickly.
Okay.
So now we want to look for a trap. So we're looking for large sales large block sales. And when we find, let's say that large block sale is here. And it's, there's one here. So there's only one here at, oops, excuse me. I'm trying to make this bigger. Okay, so there's 22 at 67.51. There's 20 at 47, and there's 15 at 44. Okay, so if we map that out, I have 67.51 is 22. Now, as a matter of fact, I'm going to show you that it's not going to be as important to understand whether the color on this is red or blue, red or green. Okay. All we're looking for are large blocks of sales at about the same price. Okay, so 61.51, and then I have 67.47 of 20, and then I have 67.44 of 15. Okay, so now let's look and see. 67.39, so we're lower, still lower. So we're still seeing selling. So we don't want to buy that yet, right?
Okay.
23, 67.39. I also see a 23 and a 34. No real big buys yet, but we are back at 67.48. So the heavy selling that occurred as it's going down, 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 at some point, these guys here are trapped. This current, let's just say these guys are here, are potential trapped sales. And we're looking for the price action of this. So if we start to see the trade continue down like so, sell, so it's sold, heavy sell, multiple sells, right? We're looking for price to come up around the trap sellers. That becomes a long. And beneath here becomes your stop. So obviously you can't predict when the longs are coming in, but you can at least monitor what's happening with the trap sales. If they start getting more and more aggressive and all of a sudden stops, because we know about the auction process, right? Auction process is, in short, it's searching for value through price action. So therefore, the market's trading lower to find buyers. So once we find those buyers, now the only problem with this is that it resets, and that's where the footprint software is going to be helpful. Okay. But I want you to know that before there was footprint software, we had to do it like this. Yep. Okay. So footprint software hasn't been around forever. And you can scalp this stuff. So if I find buyers come in, let's just say they start coming in, and then I'm anticipating. So even though the price action happens, if we trade around, so this becomes that kind of trade level, line in the sand. If we start to trade, if price trades around there, I can take a long, and then the next thing for me to do is to anticipate block trades that are coming in. on the long side. So I want you to think about this in that, notice we're taking a long based off the price action, trading around big sellers.
Okay.
And if we can identify where this is only a few ticks, normally this is about, how many ticks do you think this normally occurs at? How many?
Know. Maybe 4 ticks, 5 ticks.
Yeah, reasonable, right? It's not 12 or 20. Let's just call it 5 ticks. Now, as price goes through the 67.39, and you see the block of 23 and the block of 34, so then let's say that happens at this red line. Between that red line and where it stops, where it finally stops, what do you think you see there? So once you see the big heavy sellers, in order for this to turn, what needed to happen before the turn?
Some imbalance.
No, this is an imbalance.
Okay.
Block trades are basically an imbalance. What happens after the imbalance? So once you...
Exhaustion.
Yes, thank you. What does exhaustion look like in a data form? Price or volume, whatever you want to call it. What does that look like?
When there's no follow through.
Right. Okay. So we see a block of 23 and a block of 34, right? Yes. Then we see, let's say we see 10. We see 10. Then the next price down, we see what?
For example, 5.
Okay. And then the next price down, we see what?
Yeah, 1, maybe 2.
2. Okay, great. Price exhaustion. And as a matter of fact, it's called seller's exhaustion.
Yes.
This is almost like they gave it everything they've got. They're just, going to give it everything they got, and they have nothing left. They're exhausted. In this sense, it just got too cheap. Too cheap, too quick. So as soon as we can see this is a clue. So we're interested in seeing what happens here, right?
Yes.
And I'm going to show you when we look at this chart again that there's going to be a trade back to this level. I'm going to put this in black. There's going to be a trade back to that level. There's going to be so basically there's going to be a pause at each one of these levels on the way back up. Okay?
Right.
Okay. So you see the trap sellers create the seller's exhaustion. Price exhaustion. Let's see. Price is too cheap. Price got too cheap to sell. All of those, right? Okay. So that's the clue that it's going to turn.
But Kai, I just have one question about these guys who are selling this amount of contracts.
Yes.
Is it this price exhaustion? Does the price exhaustion came from because they get rid of their inventories, or just because there are no other sellers participating in this move, or why is it? I mean, it's getting too cheap, but why?
Right. Well, remember, it's everything you can think of.
Okay.
There's so many. Remember that list. Remember the list. Remember who's trading. Remember who's trading this stuff.
Yes.
Where is your here? And I showed you the picture of the trading desk, right? In the manual. For who was that? BP, I think. British Petroleum.
Yes. Yes.
So imagine you have that kind of, size traders for just one company. And then each one of these guys have the same thing.
Okay.
You're trading against these guys. And that's all they do. So it's when it gets to that point, it just becomes a near-term exhaustion. That's all.
Understand.
It's a trade opportunity. It's a, where is my picture? Boom. And then I did that and that. Okay. It just gets to the point where the high of today was 72. Okay. Let me just take a look. So the top was 68. The top was 68. Let's just go 68.50, okay?
Okay.
So there were, oops. So of course they're all following overnight into tonight, whenever. They're all following the path of the hurricane. They all have it all on their screens, right? You get the initial price spike. This price spike up to here. Then you start to see the same thing. You see block trades come in around 68.50. But on the top side, it's not you're looking for trapped buyers. So trapped buyers happened up here. And there's always potential until price itself. So it gaps up, trades into 68.5. You get a couple trapped sellers. You get a buyer exhaustion, price exhaustion. Price got too expensive based upon the hurricane, the current news. Then as soon as that turns around the trapped buyers, they become trapped. And so price will trade down, then it'll trade back up to that trapped buyer. And then if they plan on staying in this position, they'll sell again.
Okay.
So they're always looking for this reaction as well. This reaction is an opportunity to close out those traps and obviously close out the hedge or do whatever and do a reposition. It's never going to go from 68.50 straight down to 67.39 unless it's an explosion. And we're talking about crude right now. Unless it's an explosion of a pipeline or something, right? Or something. Anything can happen at any time.
Yes.
But the market will always give an opportunity to let these guys get out. Always. Because there's always still going to be a buyer. There's always still going to be a seller through that list of players.
Understand.
And that's why it can't be all or none. Schlumberger may have a different contract or different hedge, different customers that they need to service than ExxonMobil or Total or BP or Petrobras. They may be there's summer, there's winter, there's seasons, there's hurricanes not going to affect someone as much as it will in the Gulf Coast. So it's going to ping between this, and it's going to trade back to each one. It's going to test each one of these levels and give you an opportunity to trade to it, to address your risk, or to get out, because it can always trade up here as we're anticipating the long. We get in because we see sell, 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 and then all of a sudden a massive flush of sales, right?
Okay.
These are relative sales. 23 and 34 is not huge. It's not like 100, but it's still relative. Relative large. Then we see less come out of that. Then we see price turn, gives us an opportunity for a stop. So we get in based upon that. We anticipate block trades. And so then in this sense, we did, after anticipating, so we're long first, and we anticipate block trades, we see block trades. So buy blocks come in, supporting our trade. Now let me see if I can scroll back and just start seeing some block trades. Now I see 67.59. There was 67.59. So we're way back up here now, 67.59. I'm sure there was some before. But this is how the footprint is going to remember this for you. So there's 20 here. What else? Here's 19 at 59 as well. So that's pretty much across, 19 and 20. There's 10. Adds up.
59 maybe?
Yeah. So let's just see. But we're back up to 67.60.
Okay.
Back up here. So let's see on a 1 minute chart now how let's see what else we can find through here. Okay, look at that. On a 1 minute chart, you could see that sequential, the price, the sellers,
Yes.
1, 2, 3, 4, 5, 6, 7, 8, 9. We're at a 9.
Mm-hmm.
The low was 67.33. The last block trades were at 67.39. The long was around 67.39, so around here.
Okay.
Popped. We have a block at 67.44. See this little transition here?
Yes.
There's a little transition at basically 44, right? Let's call that. That's 67. So where's 67? Yeah, 47. Excuse me, where's 47? Look, there's another one right here at 47.
Okay.
Okay? And then 51. Where is 51?
It's here.
About here. There's another one at 51.
Mm-hmm.
So wherever these split, there was a brief little auction based upon the previous sales. It pauses at each one of those prices. So you can see where price is going to have, it's going to run into supply from the previous sales. From whatever these sales came in, wherever the big numbers are in here, it's going to have an effect on the way out.